You're watching Silver News Daily. Subscribe for more.
Did you know that silver could become one of the most profitable investments in 2024? While gold often steals the spotlight, experts are now predicting a massive rally for silver that could outshine its more glamorous cousin. In today's video, we'll uncover why silver's unique combination of rising industrial demand, inflation hedging appeal, supply constraints, robust investment interest, and enhanced market integrity is setting the stage for unprecedented price appreciation. So stay tuned to learn how you can capitalize on this potential silver boom before it's too late.
Relationships within the EU. Italy has gone right with Meloni, and the Germans are sitting there, trying not to upset things. But there is no doubt that the Germans are getting impatient, if you like, about the problems that France is bringing into the euro. And I think, the whole of the euro system needs to be recapitalized. And we have a situation where France has gone communistic, if you like. I mean, I don't think it's an exaggeration to say that. You're right to point out the political pecking order is yet to be fully determined, but the indications are that this is going to be a very left-wing government rescinding a lot of the cost-saving things that Macron introduced. I mean, for example, like raising the pension age, that's going to be, rescinded, etc. Spending, and I can see tensions arising. I mean, we've got used to riots in France. I think you ain't seen nothing yet. I think that's going to get a lot worse because we've now got political tensions as well as farmers, upset about climate change legislation, whatever. I mean, France is going to deteriorate into a really rather nasty situation, and it's going to, I think, bring enormous strains on the euro. I suspect also that foreign institutions will be selling down French debt. There is the threat that the Saudis might do that. Also, the Japanese, who in the past have been heavy investors in French debt, they, I think, are liquidating their positions as well, or at least, liquidating long-term debt and switching into short-term debt, try and get away, if you like, from that risk. It's just not good. I mean, the starting point.
Silver's unique properties make it indispensable in various industries, driving a surge in demand that could significantly boost its price. Unlike gold, silver has extensive industrial applications that span from electronics to renewable energy. In the world of electronics, silver is a key component due to its superior conductivity. It's used in everything from smartphones to electric vehicles. With the rapid growth in technology and increasing adoption of electric vehicles, the demand for silver is set to rise sharply. But it's not just electronics. Silver plays a crucial role in the renewable energy sector, particularly in solar panels. The photovoltaic cells in solar panels rely on silver for optimal efficiency. As the world shifts towards cleaner energy sources, the demand for solar panels, and consequently silver, continues to skyrocket. Medical applications also contribute to silver's rising demand. Its antibacterial properties make it invaluable in medical devices and hospital settings. From wound dressings to surgical instruments, silver is a critical component in ensuring sterility and reducing infections. Given these diverse and growing industrial uses, silver's demand is expected to remain robust. This rising industrial demand, coupled with limited supply, creates a compelling case for silver as a high-potential investment. If you're looking to diversify your portfolio with a metal that has strong growth prospects, silver might just be the answer.
Something that you pluck out of thin air. No point in doing it. Silly game. So I don't do that. But also, the question should be phrased, how far do you see the dollar going down or euro going down or whatever your favorite currency is? And the answer to that, I'm afraid, is I think they're all on their way to zero. The question is, how long will it take to get there? that depends, I think, on how events unfold. I mean, we've got potential war in the Ukraine and also in the Middle East, which could end up with being nuclear. I mean, obviously, you know, it's goodbye everybody if we go down that route. But there is also the fact that the US dollar is in a debt trap. And there seems to be absolutely no recognition in the political class of the importance of that position. And they're still spending like Billio. The excuse is, and it's an election year, and we've got to get re-elected. And on top of that, I mean, we've drifted into socialism in Europe with France and now the UK. That's going to bring on financial disasters for both the euro and also sterling. And you can see that the Bank of Japan is suppressing interest rates at the zero bound. They're still zero. They're determined not to raise them. And at some stage, they're going to have to do it. But I think the biggest problem, which everybody is getting wrong, and I mean virtually everybody, is the outlook on interest rates. They think that interest rates are going to fall. They're not. I mean, they might come down a touch because central banks actually don't understand the role of interest rates. And also they're under huge pressure from markets to reduce interest rates. Also, they're under pressure to if you like, alleviate the problems in the banking system, which undoubtedly are exacerbated by current interest rates. I mean, look at the commercial real estate situation in America, for example. You've got zombie companies who cannot afford interest rates at this level, and they're gradually having to refinance themselves from the lower rates to which they became used. These are all disasters coming up, and I don't know which one's going to hit the fan first. I mean, nobody does, but it's all there. It is.
Silver's reputation as an effective hedge against inflation is one of the primary reasons investors flock to this precious metal, especially in times of economic uncertainty. When inflation rises, the value of paper currency tends to decrease, but precious metals like silver maintain their value or even appreciate. During periods of high inflation, investors seek assets that can preserve purchasing power. Silver, like gold, has historically performed well during such times. For instance, in the 1970s, when the United States experienced significant inflation, silver prices surged alongside gold. This trend has been observed in more recent times as well, with silver prices often rising in response to inflationary pressures. Moreover, central banks around the world have been engaging in aggressive monetary policies, including low interest rates and quantitative easing, to combat economic slowdowns. These actions can lead to higher inflation, making silver an attractive asset for hedging purposes. Unlike fiat currencies, which can be printed at will, the supply of silver is limited, adding to its value during inflationary periods. Silver's dual role as both an industrial metal and a store of value makes it particularly appealing. While its industrial demand supports its base price, its role as a hedge against inflation provides additional upside potential. This dual functionality means that silver can offer protection against both economic slowdowns and periods of high inflation. For long-term investors, incorporating silver into their portfolios can provide a valuable hedge against the eroding effects of inflation. As we continue to navigate uncertain economic times, the inflation hedging appeal of silver is likely to become even more pronounced. Next, we'll explore the supply constraints that further enhance silver's investment potential. But before that, make sure to hit the subscribe button and join the conversation in the comments below. What are your thoughts on silver as an inflation hedge?
Is a budget deficit of nearly 6%. I wouldn't be surprised to see that rocket under this new administration towards a figure like 7, 8, maybe even 9%. And once that's realized in the markets that is the direction in which it's going, I think the whole of the euro system is going to come under huge, huge strain. As far as the UK is concerned, we have a socialist prime minister masquerading as a moderate. Um, and when you see, the cabinet, the new cabinet, the ministers, and you see them being questioned on this, actually, there seems to be very little difference from the previous administration. But there are big promises there. And I have no doubt that Starmer will come under pressure to satisfy the unions with increased legislation to help the unions. Legislation, if you like, with respect to minimum wages, with respect to I don't know about the 4-day week. That was on the agenda, but it's now probably off the agenda, sort of thing. Nationalising the railways, all these things. HS2, talking to the European Union about a closer relationship. I mean, this is a wish list, and it's not going to happen. But the one thing that we can be certain of is that we will get both rises in taxes, which will be aimed to penalise wealth. I mean, it's as simple as that. And at the same time, we'll get a rising budget deficit. And that is going to kill sterling. I mean, there is no doubt about that. Sterling is very heavily owned because London is a financial centre. It is the European financial centre. So that the global banking system has a lot of sterling balances. And so do the investing institutions. And I can see, I mean, what happened under Liz Truss is going to be a pimple of problems compared with the boil, I think, that markets will now lance. So
one of the critical factors contributing to the bullish outlook on silver is the increasing supply constraints. The production of silver is facing numerous challenges, which, when combined with rising demand, can significantly drive up its price. Firstly, silver is often produced as a byproduct of mining for other metals like lead, zinc, and copper. This means that the supply of silver is heavily influenced by the market conditions and production levels of these primary metals. When the prices of these metals decline, mining operations may scale back, leading to a reduced output of silver. This indirect dependency makes silver supply somewhat volatile and susceptible to fluctuations in the broader mining industry. Secondly, geopolitical and environmental regulations are becoming stricter, impacting mining operations worldwide. Many silver mines are located in politically unstable regions where regulatory changes or conflicts can disrupt production. Additionally, environmental concerns and stringent regulations are increasing the costs of mining operations, leading some companies to reduce output or halt projects altogether. Moreover, there have been significant declines in the discovery of new silver deposits. According to industry reports, there has been a noticeable reduction in exploration activities and new discoveries. Existing mines are depleting, and without new sources, the overall supply of silver is likely to diminish. This scarcity adds a premium to silver's price as demand continues to grow. Recycling silver, while a source of supply, is not enough to meet the increase in demand. The process is costly and not as prevalent as mining, contributing only a small fraction to the total supply. This insufficiency in recycling further exacerbates the supply constraints. These supply constraints, coupled with rising industrial and investment demand, create a perfect storm for potential price increases. Investors who understand these dynamics can position themselves to benefit from the upcoming scarcity-driven price surges in silver.
about the CIA, that was when he assumed power. Basically, he locked up the CIA's operatives within the royal family, kicked them out. He realized that the Saudi's future is with Asia, not with America. So that tie had to be broken. Now, if the future is with Asia, then obviously, being in the Asian camp, they would be very sensitive to Russia's position. And Russia has made it absolutely clear in the various St. Petersburg economic forums since the sanctions were applied on Russia and her foreign exchange balance is frozen, that their property had been stolen, and no government with any sense would actually hold their balances in dollars or euros and get their gold into their own possession if it is, let us say, stored in London or New York or Paris or Switzerland even. So this was a message which was delivered to over 80 nations officially represented, 14,000 attendees from foreign countries back in the St. Petersburg Economic Forum in June 22. And the story has gone on from there. So really, I think that the message, the rumor, the story, whatever, that the Saudis have threatened to sell bonds is actually in accordance with what's happening anyway. I don't know whether they have actually said that. I haven't seen it. But there is no doubt that Mohammed bin Salman has moved away from America and the West because Saudi's main interests are now Asian. It's quite simple. It's India and China. And I mean, if you may recall, I think it was about 2 years ago when President Biden thought he ought to go and talk to the Saudis and persuade them to, if you like, increase their oil output. And I don't think he even got a meeting with Mohammed bin Salman. I mean, this was something which the Saudis just played down. I mean, they were polite, but basically piss off. And the next week, President Xi came in, and I mean, it was full ceremonial. It really was. Fighter jets flanking the presidential aircraft, and black chargers riding along by by President Xi's motorcade. The whole thing. Now that tells you exactly where Saudi's interests really lie. In fact, I had an inkling of this back in 2014 because I was speaking to a director of a Swiss refinery, and he was saying that they were taking in 400-ounce LBMA bars from Arab sources, which I assume includes Saudi Arabia, recasting them into the Chinese 1 kilo 4/9 standard and returning them to their owners. So you think, why? Well, the answer basically is that they see their reserves, if you like, their store of money, real money as opposed to fiat credit, as being more marketable in Chinese.
Investment interest in silver has been gaining significant momentum, driven by both institutional and retail investors seeking to capitalize on its potential for high returns. Several factors contribute to this growing interest, positioning silver as a standout asset in the precious metals market. Institutional investors, including hedge funds and large financial institutions, are increasingly turning to silver as a strategic investment. The metal's relatively lower price compared to gold offers a more accessible entry point, allowing for substantial upside potential. Large-scale purchases by these institutions can have a considerable impact on silver prices, further fueling the bullish sentiment. Exchange-traded funds, ETFs focused on silver, have seen a surge in popularity. These investment vehicles provide an easy way for investors to gain exposure to silver without the need to physically hold the metal. The increased inflows into silver ETF reflect a growing confidence in silver's investment potential. For instance, the iShares Silver Trust, SLV, one of the largest silver ETF, has reported significant increases in holdings, indicative of robust demand from investors. Retail investors are also playing a crucial role in driving up silver prices. The rise of online trading platforms and social media investment communities has democratized access to silver investments. Platforms like Reddit's Wall Street Bets have seen a growing number of discussions around silver, with many retail investors rallying behind the metal as a promising investment. This collective action can lead to substantial short-term price movements, as seen in early 2021 when silver briefly surged due to a coordinated buying effort. Additionally, the ongoing economic uncertainties and low interest rates have led many investors to seek safe haven assets. Silver, with its dual role as an industrial metal and a store of value, fits this criteria perfectly. Investors are drawn to silver not only for its potential price appreciation, but also for its ability to preserve wealth in volatile market conditions. The robust investment interest in silver is a key factor that could drive its price to new heights. As more investors recognize the benefits of including silver in their portfolios, the demand is likely to continue rising, supporting higher prices.
um, if you like, inform, educate, discuss, with BRICS members, the future and so on. And this includes the introduction of a trade settlement currency, which Russia wanted to introduce into the Johannesburg agenda, but failed to get approval, because if it's got to go on the agenda, it's got to get unanimous approval. India objective, China felt it was too early. But Russia's going to push for this, I believe. And I think I have seen a paper written by two, I think they were Chinese economists, about how such a currency would be constructed. They've called it the unit. Now, that paper was written late last year. I've read it, and it seems to me that the proposals are sort of really rather general. I mean, they're talking about this new currency being backed 40% by gold and so on. But so how it will actually pan out, we will see. I think that paper was merely a sort of form of introduction. It sort of get the debate going, and as a result of the debate, something will be put on the agenda in October, which is the next major BRICS summit. There are two things going on here. I mean, there's obviously BRICS, and the other thing is the Shanghai Cooperation Organization. Now, you're talking about Korea. That is not a member of the SCO, but there's no doubt about it that anything that happens in the SCO will also involve North Korea. On top of that, Putin also visited Vietnam. And the point about SCO is that they have now agreed to work towards a defense agreement whereby all members of the Shanghai Cooperation Organization agree, if you like, to be military allies. I'm not going to put it more strongly than that, because this is something which is in formation. I think the point about it is that the intelligence services in the West will be alerted very clearly to what's going on. And this is desperately important when NATO is trying to expand itself into Ukraine. I mean, okay, it's sort of in semi-denial, but there's no doubt about it that, Ukraine's gone wrong for NATO. And there's a problem that the whole thing could well get escalated. So it makes sense for Putin to say, well, if things are going to escalate and you're going to lose patience over Ukraine, then bear in mind it's not just Russia you'll be fighting. There's the whole of Asia.
One of the pivotal factors contributing to the increasing confidence in silver as an investment is the enhanced market integrity brought about by regulatory reforms and technological advancements. Market integrity is crucial for attracting and retaining investors, ensuring that the trading environment is fair, transparent, and free from manipulation. Historically, the silver market has faced numerous allegations of price manipulation, particularly for the use of futures contracts. Such practices have undermined investor confidence and distorted the true value of silver. However, recent years have seen significant strides in addressing these issues, fostering a more trustworthy market environment. Regulatory bodies like the Commodity Futures Trading Commission, CFTC, in the United States have wrapped up their efforts to combat fraudulent activities in the silver market. Notable cases, such as the investigations into J.P. Morgan's trading practices, have highlighted the commitment of regulators to uphold market integrity. These actions serve as a deterrent to potential manipulators and reassure investors that the market is being monitored and policed effectively. Technological advancements have also played a crucial role in enhancing market integrity. The advent of blockchain technology and its application in the precious metals market offers unprecedented levels of transparency and traceability. For instance, some exchanges and trading platforms are adopting blockchain to provide an immutable record of transactions, making it easier to detect and prevent manipulative practices. Additionally, the implementation of more sophisticated trading surveillance systems has improved the ability to detect irregularities and potential manipulation in real time. These systems analyze vast amounts of trading data to identify patterns indicative of spoofing, front-running, and other illicit activities. By swiftly addressing these issues, regulators and exchanges can maintain a fair and orderly market. The push towards greater market integrity is also evident in the efforts to standardize and improve reporting requirements. Market participants are now required to provide more detailed and timely disclosures of their trading activities, enhancing transparency and enabling better oversight. As a result of these measures, investor confidence in the silver market is growing. A transparent and well-regulated market attracts more participants, leading to increased liquidity and more accurate price discovery. This environment benefits all investors, from large institutions to individual retail traders, by ensuring that silver prices reflect true supply and demand dynamics rather than being influenced by manipulative actions. For investors considering silver, the enhanced market integrity provides a solid foundation for making informed decisions. With confidence in the market's fairness and transparency, investors can focus on the fundamental factors driving silver's value. Don't forget to subscribe to our channel for more in-depth analyses and updates on silver and other investment opportunities. Next, we'll explore some historical cases of price manipulation in the silver market and what they teach us about today's trading environment. And let us know in the comments, do you feel more confident investing in silver with these enhanced market safeguards?
If you like, without counterparty risk, was gold, silver, and copper. I mean, it's as simple as that. Now, obviously, we think in terms of gold. Silver is not priced as a monetary metal because if it was, then we would be looking at the sort of relationship to gold that pertained in the 1870s, or up until the 1870s, when there was about sort of 15 to 1 ratio, something like that. Obviously, we're now looking at 76 to 1 ratio. It is not being priced as a monetary metal. It's as simple as that. There is no doubt, however, you just look at the Silver Institute's estimates of supply and demand. There's been a deficit in terms of the sum of mine and scrap supply compared with demand. And that's a deficit which has been around now for nearly 4 years and is only satisfied by drawing down on silver stocks, above ground stocks, which predominantly are either held in investment hands or alternatively are held as strategic stocks. Now, strategic stocks were extremely common back in the old days. We're going back to the days when Bretton Woods was around. But it's not so common now, with one notable exception, and that's China. China has accumulated quite a lot of silver. I haven't been tracking that too much, but I do know that they have, in effect, been controlling the price with a view to accumulating stocks of silver. And the way in which industrial demand for silver has gone, explains that it was a perfectly rational thing for the Chinese to do. I saw someone the other day suggesting that a large seller might dump silver on the market to screw the price. I think that's extremely unlikely. It's too precious a commodity, an industrial commodity, for anyone to consider doing that, because they know they would just lose control over their silver. Why do it? So that's not going to happen. The fascinating thing is that virtually everybody dealing in gold doesn't actually understand the monetary status of gold. They've got this sort of vague idea, if you like, that there's a history and da-da-da-da-dum. But actually, they don't understand the legal position that gold is money and the rest is credit. This is the way it was described by J.P. Morgan back in 2012.
Understanding the history of price manipulation in the silver market is essential for grasping the significance of the recent improvements in market integrity. These historical cases highlight the challenges the silver market has faced and underscore the importance of robust regulatory frameworks. One of the most infamous examples of silver price manipulation is the case of the Hunt brothers in the late 1970s and early 1980s. William and Nelson Hunt attempted to corner the silver market by buying massive quantities of the metal, both physically and through futures contracts. Their aggressive buying drove the price of silver from around $6 per ounce to nearly $50 per ounce in January 1980. However, when the market eventually crashed, silver prices plummeted, and the Hunt brothers faced severe financial consequences. This event, known as Silver Thursday, caused widespread disruption in the silver market and highlighted the potential for manipulation when significant capital is concentrated in the hands of a few players. More recently, several major financial institutions have been implicated in silver price manipulation. For example, J.P. Morgan faced allegations of manipulating silver prices through spoofing, a tactic where traders place large orders they do not intend to execute to create a false impression of market demand or supply. The Commodity Futures Trading Commission, CFTC, and other regulatory bodies have been vigilant in investigating and penalizing such activities, resulting in substantial fines and increased scrutiny on trading practices. The Deutsche Bank case is another notable example. In 2016, Deutsche Bank settled lawsuits alleging that it conspired with other banks to manipulate silver prices. As part of the settlement, Deutsche Bank provided evidence of collusion, which further implicated other financial institutions. This case not only resulted in financial penalties, but also reinforced the need for stringent oversight and transparency in the silver market. These historical cases of price manipulation have had significant impacts on investor confidence and market stability. They serve as cautionary tales that underscore the importance of regulatory intervention and technological advancements in maintaining a fair trading environment. The lessons learned from these events have driven the implementation of more robust regulatory measures and surveillance systems to detect and prevent such activities. The increased regulatory scrutiny and the adoption of advanced technologies for monitoring and transparency have significantly improved market conditions. Investors can now feel more assured that the silver market is better protected against manipulation, allowing for more accurate price discovery based on genuine supply and demand factors. To stay informed about the evolving dynamics of the silver market and other investment insights, be sure to subscribe to our channel. Next, we'll delve into the role of technological innovations in shaping the future of silver. And share your thoughts in the comments. Do you think the measures taken against price manipulation have been effective in restoring trust in the silver market?
To a committee of Congress. It's still true today. And this is actually based on Roman law, which goes all the way back to the 12 tables in 450 BC. Formalized by jurors over the next 1,000 years, and then crystallized in Justinian's pandemics, and also the Basilica for the Eastern European Empire, and that was about 900 and something AD. So, and all the successor nations from the Roman Empire, which actually happened to colonize the world, have this in their common law, that gold, silver, and copper are actually money, or can operate as money. They are the money of last resort. Everything else is credit, whatever. So few people understand this. I mean, when I talk to gold bugs, supporters of gold, I mean, yeah, they're gung-ho for gold going up and all the rest of it, but they don't actually understand the status. And a lot of these people think that Bitcoin, is the future for money. But Bitcoin has no legal status as money. That's not going to happen overnight. I mean, I don't know how, I'm not going to get drawn into that debate. But the important point is that when you look at silver, when the price of gold goes up, which, as I say, is actually the value of paper currency going down, there's that faint echo in silver, if you like, that the more that this paper currency is going down, some moneyness is returning. The ghost of money is going back into silver. And, the relationship is a catch-up one. So what we typically see is gold goes up 1%, silver goes up just under 2%. But when the fears, if you like, surrounding paper currencies diminish and the price of gold drifts, then under those circumstances, silver drifts even faster. And that's why it has been actually such a disaster for so many for so long. But of course, now, with all these disasters, which I enumerated at the beginning of this interview, you can see that anyone with any sense can see that, the end of the fiat era is hoving into view. And under those circumstances, you've got to think about silver as a monetary asset, as real money, if you like, in the original legal sense. So I hope
technological innovations are playing a transformative role in the silver market, enhancing both the industrial applications of silver and the integrity of its trading mechanisms. These advancements not only drive demand but also foster a more transparent and efficient market. One of the most significant technological innovations impacting the silver market is the rise of renewable energy technologies, particularly solar power. Silver is a crucial component in photovoltaic cells used in solar panels. As the global push towards renewable energy intensifies, the demand for silver in solar applications is expected to soar. The International Energy Agency, IEA, predicts a substantial increase in solar energy installations, which will, in turn, drive up the consumption of silver. This growing industrial use underscores silver's critical role in the green energy transition and positions it as a metal with substantial future demand. Moreover, advancements in electronics and electric vehicles, EVs, are further boosting the demand for silver. Silver's superior electrical conductivity makes it indispensable in the production of high-performance electronics and batteries. The rapid growth of the EV market, along with increasing consumer electronics production, ensures a steady rise in silver consumption. Companies are continuously innovating to improve the efficiency and performance of these technologies, often relying on silver to achieve these goals. On the trading front, blockchain technology is revolutionizing how silver transactions are conducted and recorded. Blockchain provides a decentralized and immutable ledger that enhances transparency and reduces the risk of fraud. By recording every transaction on a blockchain, stakeholders can trace the provenance and movement of silver, ensuring authenticity and reducing the likelihood of manipulation. This technology also facilitates faster and more secure transactions, making the silver market more efficient. Furthermore, advanced data analytics and artificial intelligence (AI) are being utilized to monitor trading activities and detect suspicious patterns indicative of market manipulation. These tools analyze vast amounts of trading data in real time, identifying anomalies that might suggest spoofing, front-running, or other illicit activities. By leveraging AI and machine learning algorithms, regulators and market participants can more effectively safeguard the market against manipulation and maintain a fair trading environment. In addition to these technological innovations, the development of new investment vehicles, such as digital silver tokens, is making it easier for investors to gain exposure to silver. These tokens represent ownership of physical silver stored in secure vaults and can be traded on blockchain platforms. This innovation democratizes access to silver investments, allowing a broader range of investors to participate in the market without the need to handle physical metal. Technological advancements are thus reshaping both the demand dynamics and the trading landscape of the silver market. As these innovations continue to evolve, they will likely further enhance silver's appeal as a versatile and valuable asset.
History rhymes rather than repeats itself, if you like. So I wouldn't put too much emphasis on the historic, what happened in history, but I would try and argue it, if you like, from a contemporary position. What we are basically seeing is the value of credit going down. And if you look at dollar credit, now credit in dollars is both the currency, because there is a balance sheet entry on the Fed's balance sheet, liability, which is the dollar notes which you may have in your possession. Bank reserves are actually a liability at the Fed with exactly the same status as banknotes. So you can see that currency is credit. It is, if you like, a higher ranking form of credit than, let's say, a bank deposit, because a bank deposit introduces credit risk that the bank may not pay you back as a depositor. Everything you do, bonds are credit. The way to discern whether something is credit or not is to think, is there a liability or an obligation on one side, or a debt on one side, and a credit on the other? And if the answer is that something is backed by an obligation, like a bank deposit, you don't actually own the credit, if you like, in the bank, in your deposit account. It is owed to you by the bank. When you deal in derivatives, these are all credit. Even when you deal in equities, those are credit. Because what is an equity? An equity is an obligation of the management of a company to pay you a future income stream, or at least accumulate it on your behalf on the company's balance sheet. Now, that is not a material asset. That is credit. Okay, I know you sort of think in terms of, well, ownership of shares is actually ownership of a part of a company and all the rest of it. No, it represents the ownership. It is an obligation. And worse than that, the whole financial system now works off certificates of entitlement. And what does this mean? It means that certificates have been dematerialized. You no longer have evidence of your ownership, if you like, of equity in a company. In a company, that is now bound up, if you like, in the central counterparty, which actually owns the certificate. Again, the credit, it owns the credit from the company, in return for which it has an obligation to you to deliver that, or to deliver it to whoever you say. Well, if you sell it in the markets or whatever. But you don't own it. You have got credit twice over. You've got two links of credit between you and your supposed ownership of a portion of the company. So everything other than physical gold, physical silver, but particularly
geopolitical factors play a significant role in shaping the silver market, influencing both its supply and demand dynamics. Understanding these factors can provide valuable insights into potential price movements and investment opportunities in the silver market. Political stability, or the lack thereof in major silver-producing countries, can have a profound impact on silver supply. Many of the world's largest silver mines are located in regions that are prone to political and economic instability. For instance, countries in Latin America, such as Mexico and Peru, are significant silver producers. Political changes, regulatory shifts, or conflicts in these regions can disrupt mining operations, leading to supply constraints. Investors need to monitor geopolitical developments in these areas closely, as any disruption can lead to price volatility. Trade policies and international relations also affect the silver market. Tariffs, trade agreements, and sanctions can directly impact the flow of silver and other precious metals across borders. For example, sanctions on major silver producers can limit their ability to export, thereby reducing global supply. Conversely, Favorable trade agreements can facilitate smoother transactions and potentially lower costs for silver importers and exporters. The ongoing trade tensions between major economies, such as the United States and China, add another layer of complexity to the silver market. These tensions can affect investors' sentiment and lead to fluctuations in silver prices as market participants react to the latest developments. Geopolitical tensions and conflicts can also drive demand for silver as a safe haven asset. In times of political uncertainty or military conflict, investors often seek refuge in precious metals like silver. This is because silver, like gold, is perceived as a stable store of value that can preserve wealth during turbulent times. Historical examples include periods of war or significant geopolitical unrest, where precious metals saw increased demand and price appreciation. Given the current geopolitical climate with ongoing conflicts and rising tensions in various parts of the world, silver's role as a safe haven asset is likely to remain relevant. Another critical geopolitical factor is the influence of major financial institutions and governments on the silver market. Central banks and sovereign wealth funds hold substantial reserves of precious metals, including silver. Their buying and selling activities can significantly impact market prices. Additionally, governmental policies related to mining, environmental regulations, and taxation can affect the operations of silver mining companies, influencing both production levels and costs. In the context of silver, geopolitical factors are intertwined with broader economic trends such as inflation, currency fluctuations, and global economic growth. These elements combine to create a complex and dynamic market environment. By staying informed about geopolitical developments and understanding their potential impact on the silver market, investors can better navigate the risks and opportunities that arise. As we approach the final step, make sure to subscribe to our channel for the latest insights and analyses. In the next segment, we'll bring everything together to discuss how these factors collectively position silver for significant price appreciation and future returns. And join the conversation in the comments. How do you think current geopolitical events will affect silver prices?
Physical gold, because we talk about that to keep it simple. Everything but is credit. Absolutely everything. Even if I have, I have a gardener who comes once a week. He does his work and then I pay him. Now, in doing the work, he is actually relying on me to discharge my credit obligation to him in payment for his work. Everything is credit. Right. Now what happens when that collapses? Everything goes. Absolutely everything goes. Without fear or favor. You're going to lose. And also when it comes to property, incidentally, how do you value property? You value it in credit. So valuing property in credit, you don't escape the idea that you actually own bricks and mortar and all the rest of it. You don't escape this credit problem. You are bound up in it. There is no escape. The only escape is to own physical gold or physical silver, but particularly physical gold. And if you expect a collapse, let us say, in the dollar or whatever your domestic currency is, then everything in the economy is going to go tits up. So I'm afraid that is the reality of a collapse in credit. And people just don't understand this. And if we talk about the dollar, let's just be specific, because the dollar is now in a debt trap. What do I mean by debt trap? It means that debt is soaring out of control. Think in terms of interest payments. They don't pay interest. No, they just roll it up all the time. So, this is going off like that. Now, the dollar is very heavily owned by foreigners. If you look at dollar credit owned by foreigners, according to the US Treasury's TIC figures, Treasury International Capital System statistics, you've got around about $32 trillion of credit in foreign hands. 32 trillion, which is more than US GDP. they are now reducing their involvement. Where they're reducing it particularly is at the government level. The government is finding it very hard to finance itself by getting foreigners to stop selling their credit and actually buy more. Stop selling their debt, if you like, and actually buy more. China stopped buying. The Japanese institutions have stopped buying. Well, it's not entirely true, actually. The Japanese institutions have stopped buying term debt. But where they hold on to their dollars, they will just accumulate T-bills, anything under 1 year, which pays you 5.25%, 5.4%, whatever. And what you don't want, if you're a foreigner, is you don't want that.
Bringing together the diverse factors we've explored, it's clear that silver is uniquely positioned for significant price appreciation and substantial future returns. The convergence of rising industrial demand, inflation hedging appeal, supply constraints, robust investment interest, enhanced market integrity, technological innovations, and geopolitical factors all create a compelling case for silver as a standout investment. Silver's extensive industrial applications in electronics, renewable energy, and medical technology ensure a steady and growing demand. As industries continue to innovate and expand, particularly in the green energy sector, the need for silver will only increase. This industrial demand provides a strong foundation for silver's value. At the same time, silver's historical role as a hedge against inflation makes it an attractive asset during times of economic uncertainty. With central banks around the world maintaining low interest rates and engaging in quantitative easing, inflationary pressures are likely to rise. Silver, much like gold, offers a way to preserve wealth in such conditions, appealing to both institutional and retail investors. Supply constraints further enhance silver's potential for price appreciation. Challenges in mining, regulatory hurdles, and a lack of new discoveries limit the available supply of silver. This scarcity, combined with growing demand, creates a situation where prices are poised to rise as supply struggles to keep pace. Robust investment interest, driven by both institutional and retail investors, is another crucial factor. The ease of investing in silver through ETF and digital tokens has broadened its appeal, while the democratization of investment platforms has brought a new wave of investors into the market. As more investors recognize silver's potential, the influx of capital will support higher prices. Enhanced market integrity, brought about by stricter regulations and technological advancements, has restored confidence in the silver market. Efforts to curb price manipulation and increase transparency ensure that silver prices more accurately reflect true market conditions, benefiting all investors. Technological innovations are not only driving demand but also transforming the way silver is traded and tracked. Blockchain technology, advanced data analytics, and AI surveillance systems enhance transparency and reduce fraud, fostering a more trustworthy and efficient market environment. Geopolitical factors add another layer of complexity and opportunity. Political stability in key mining regions, trade policies, and international tensions all influence silver's supply and demand dynamics. In times of geopolitical uncertainty, silver's role as a safe haven asset becomes even more pronounced, driving investor interest and prices higher. In conclusion, the amalgamation of these factors creates a robust and promising outlook for silver. Investors who understand these dynamics can position themselves to capitalize on silver's potential for significant price appreciation and future returns. As always, it's crucial to conduct your own research and consider how silver fits into your overall investment strategy. Thank you for following this comprehensive analysis of silver's market potential. Don't forget to subscribe to our channel for more insights and updates on precious metals and other investment opportunities.
I don't know whether the
And
banks
remember, this video is for
match
informational
the gold
purposes
account
only
with
and not
physical
financial
gold
or investment
completely.
advice. Always consult with a
I don't
professional
know.
before
I
making any investment decision.
suspect that they probably
What are your
run
thoughts on silver's
a sort
future?
of fractional reserve
Share your views in the comments below.
system. I doubt if it's highly leveraged. I very much doubt that because they know the official policy. Um, and I would think they're in the market picking up gold whenever they can. When it's offered, take it. I think that's what they've been doing. And just bear in mind that the alternatives for this $6 trillion equivalent. $6 trillion, incidentally, at the current price is 75,000 tons of gold. I mean, we're talking a considerable amount of moolah here. Excuse me. So, you can see how it is that the shortage of gold in Western markets has been getting greater and greater and greater. You only got to look at COMEX and see the withdrawals. Now, the withdrawals don't necessarily go out of the vaults, but they certainly go out of the possession of the liquid hands, if you like, in the COMEX market. And I mean, there's staggering amounts being withdrawn. And now this is also happening with silver. So where does gold go in this? Well, let's put the monetary thing aside and just think in terms of supply and demand. Well, there's no supply and there's demand, which on rising prices could indeed become self-feeding. Because another aspect which various of my friends have noted is that in the futures market, the Chinese speculate wildly. I mean, they want leverage. They really do. But we're talking about Chinese traders, not the housewife. They know that they're close to the financial system. They know the story I've just been telling you about the People's Bank, etc., 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 about the official attitude to gold, the official attitude to the dollar, and so on and so forth. So, bang, they're in there. They're buying futures and cleaning out. And that, of course, is putting strain on our futures and forwards markets in the West. So if you ask me what's the future price for gold is, just looking at it from not a monetary point of view, but from supply and demand, how high? So, to my mind, this is an extraordinary setup, and I think it's. I rationalize it more, if you like, from the understanding of the difference between money and credit, which is actually the fundamental driver under this. This is something the Chinese understand more than us. I understand in Mandarin, I don't speak Mandarin, that the word for money is the same as the word for gold. And that tells you, I think, all you need to know about, when they see trouble in the West, that's where they're going to go. And we should follow them. We should follow them very, very closely. Don't hang around listening to the propaganda coming from our politicians and our monetary committees.